Good morning, everyone. Today is February 4th. It's a Thursday. It's almost the end of the first trading week of February 2021. And folks, I'm like 1 year behind. I'm still trying to figure out what happened to last February and March. I feel like I just feel like this last year has been a black hole with all the COVID and all the stuff that's been going around the world. It's been a mess. Futures, we're going to be opening up in about an hour and 20 minutes or so. Wanted to give you a nice early morning preview of what to expect. The Dow's kind of flat. The Nasdaq's a little higher. Markets are not really going crazy this morning. Let's just say that. There's a good reason for that. We've got a jobless claims report in about 20 minutes. Now, this jobless claims report gets updated every week, and it's a jobless claims. How many Americans are applying for jobless claims? About a month ago, the number jumped back from low 700s to all the way to 965,000 claims. And this is only going back 5 business days back. Seven days in a week. Sunday, Saturday doesn't count. So it's really going back 5 business days. So this is a real important number, because if the number is spiking, that means people are not working. If the number's coming down, people are not asking for unemployment benefits or checks. The number was going really, really high up really fast. But then as soon as it got to 965,000, it started cooling off. Now the 4-week moving average is about 868. And we've been hitting the exact consensus. Last week, the week before last, it was like 900,000 expected. We hit 900,000. Then it was 847,000 or something like that. But we've been... After going to above consensus or warning signs, we started going below consensus. But the number, you still have almost 1 million Americans, 850,000 Americans applying for unemployment, which is really, really high. And it's telling us that there's a lot of people that are not working right now. Now, in terms of the global, and that report's going to come out in about 19 minutes. And the expectation is 835,000. So if the number is spiking, if it's 900,000, 920,000, 880,000, that's not good. I want to see the number. I don't care if it meets the consensus, but I want to see it at least at the 4-week moving average. Then we know that it's moving in the right direction. Now let's talk about the global economy, and then I'll talk about U.S. stocks. Caution set in over company earnings, recent choppy trading in tech stocks, and prospects for more economic stimulus is what's driving the market right now. What's on investors' mind? Global vaccine rollout, which is becoming more organized in the US, but not in other countries except for China when the pandemic started. So this is, what did I tell you guys about a month and a half ago? If you guys think that by the end of this first quarter in 2021, that the working class is going to have vaccines, no, and the problem is we've got more infections and more negativity and more need for the stimulus, which is what I'm going to talk about next. Democrats, Republicans remain far apart on support from President Biden's $1.9 trillion stimulus package. Investors are betting that the administration will opt for a reconciliation process. It's too early in the morning to read words like reconciliation. It's only 8:12 here. And I'm in Eastern time zone. If you're in California, it's barely 5 o'clock in the morning. Anyhow, looking at the overall market. So the markets are mixed. There's really no new messages. The big report for the day is the jobless claims. What's positive is the Dow is now trading 2 days completely above the, let me just go to the actual cash contract, because that's what most investors are looking at anyway. As you can see here, it's now trading for 2 days completely above the 50-day moving average, which means the market is pulling back instead of breaking down into the twilight zone, as I like to call it. I believe the market's going to gain traction again and get bullish. One market I do want to talk about is the bond market. This is the long bond. This is the 20-year plus market. Now, short-term rates, I don't think are going to fluctuate a lot. The Fed told us that we're going to keep rates steady. But remember, long-term rates are based on expectations. It's based on what investors think, because this is based on what will happen in 20 years based on today. And investors are now breaking bonds down, which means long-term rates, the types you pay for home mortgage, so forth, should be going a little bit higher. Not a lot higher, but a little bit higher because the bonds, long-term bonds, are breaking down. Remember, lower bonds prices, higher interest rates. And just to give you an idea of, we peaked out right here. This was March, about a year ago, and we've been going down. And long-term rates basically said a year ago, we're just not going to go lower. So you're not going to see a huge influx in a huge upside or a spike in interest rates, but I'm expecting this to continue moving lower, lower, lower in the long-term trend of things. Now, I want to tell you something important. It doesn't matter where the bond market trends for purposes of a hedge, because if the stock market starts breaking the 200-day moving average, if we start breaking right here and going towards the 290 level, I don't care if the trend is like this on the bond market. This thing is going to spike. So just understand. You see this right here? This happened right here. See this little, let me show you here. This spike, this occurred when the market was crashing last February, March. This little period right here. No, actually, that's not it right here. This period right here. You see that? You see this? That's this. So it doesn't matter where it is for purposes of a hedge, because it doesn't matter if it's uptrending, downtrending. If the Dow or the S&P starts breaking this average, the bond market is spiking, which is why we use it for a hedge. But overall, bonds look like they're breaking lower, and as a matter of fact, they just broke short-term support, and they're breaking lower. So you may want to short bonds or take advantage of the situation to the short side, but I would wait after Fed data comes out. I would wait till today's jobless claims come out. But that's actually coming out before the opening bell, so that's not really an issue. Now, let me show you which stocks in the S&P 500 and the Nasdaq are leading now, and I'll let you be. So we still have retail, 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 and a little bit of financial and a little bit of energy. It's getting a little more mixed, which I like. It didn't look like this a year ago. But again, retail, 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 financial, financial, financial. You see that? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. You got basic energies, you got financial, you got financial, you got financial, a little energy here, retail, financial, retail, and Viacom. Now, this is a new one. It hasn't been on this list for a while. So this is a stock you want to start focusing on. Whenever a stock can make its way up in the S&P, it's a stock to watch. So the stock that I would be paying attention to is Viacom. Let's take a look at it right now. And the first thing I'm going to do is I'm going to look back to see if it took out the area right here, which was the resistance level before we broke down. I want to see if the stock traded above the February high, and it has. And the stock is looking really, really good right now. Now, I want to see if it's going to break below the 48 level, but if not, there's a good chance the stock will spike again. So keep your eye on Viacom. It is one of the newer stocks that made its way up. Everything else I'm seeing here seems to be the usual suspects. Nordstrom's been on here for a while. Coach has been on here for a while. Discovery, Kohl's, Discovery, SFB Financial, Freeport McCormick has been on here forever. So has Albemarle. These are some of my favorite basic material companies, but you got to start looking at Viacom CBS. This is definitely a stock that's been making its way up. For example, if you look back, let me go back 1 week. Let's see here. Oh, it's still there, huh? I guess it snuck on. Let's go a month ago. Let's see where we have it here. Yeah, I don't see it here a month ago. But notice Nordstrom's, Freeport, Coach, Kohl's, Albemarle, L Brand, not SIVB. But again, the bottom line is, if you want to go to today, Viacom. I guess I'm a little late to the party. It was here a week ago, but I didn't notice it. But Viacom is the only real new one that I'm seeing here that's making headway. So keep your eye on Viacom CBS. Now, as far as the Nasdaq, that's the S&P. As far as the Nasdaq, the focus remains on foreign stocks, foreign tech stocks like Mercolibre, Baidu, and chip stocks. Qualcomm, Applied Material, Micron, KLA, KLAC, KLAC, Lam Research, Western Digital. Anyhow, the bottom line is foreign tech companies, foreign tech companies, China, South America, and chip stocks. And also keep your eye on this Expedia. It's been making its headways up here. And let's see if Expedia, because people may be looking already forward to traveling. Let's just take a look at the first thing I look at. Did it take out this February price level? Yes, it did. So again, for Nasdaq, I would keep my eye on Expedia. I don't really see any other new stock here that's really on the, maybe ASML, but it's not high enough. I would focus on Expedia, and I would focus on Viacom. Those are the two stocks you want to focus on, and pay attention to the jobless claims report that's coming out. The consensus is in the mid 800,000s. If it's higher, the market may drop. If it's lower, the market may spike. Now, before I let you go, if you've ever wanted to know how the smart money operates, I got good news for you. Former Wall Street insider Jeff Zanineri, he's got you covered. Jeff is revealing a little-known market secret that Wall Street consistently profits from. And once you know about it, you'll never, ever, ever trade the same way again. This trading event is so powerful. It's given Jeff's readers the chance to make a wide range of double and triple-digit winners month after month. Now, tell me, who wouldn't like double and triple-digit winners month after month? Everybody, right? But don't take my word for it. What do I know anyway? I mean, I'm just the head strategist of Wealth Press, right? Click on the link below, get all the details, learn Wall Street's secrets for yourself. Double, triple-digit gains? Who wouldn't want those? And make sure you like this video and subscribe to the Wealth Press channel if you're watching YouTube. Stay ahead of the market by being the first to be notified when we post a new video. And follow this link. Learn Wall Street secrets for yourself. Jeff is the real deal. This guy is a hedge fund insider. Wall Street consistently profits from this. You've got to check it out. You're going to love this. Follow the link below. Like us, comment, give me feedback. Bye, guys. Have a great, great day. And keep your eye out on this jobless claims report that's coming out in 10 minutes.